So today I have the privilege of introducing and chatting with Caitlin Searns. Caitlin is a title rep and she works with Fidelity. Thank you for being here. We really appreciate it.
Thank you.
So my first big question for Caitlin is, just so people understand, what does it mean to be a title rep? What is title? And can you just give us a brief summary of that?
Absolutely. Title insurance. This is one of those things people don't really know about or even come across until they're buying or selling or refinancing property. I'm a title rep. I work for Fidelity National Title. I spend my days talking to agents, escrows, lenders, anyone buying and selling property. And what we do is we insure the title to your home. We make sure that when you are buying a property, you have it free and clear. There's no loans, liens, judgments, anything you don't know about. When you close title, everything that's against the property you're aware of, and you have clear title.
So from my perspective, what that means is that when we sell a house and you go through a process called escrow, you make sure that anything is paid off or removed from that house so that it does not then go with the new buyers.
Absolutely.
Okay, that's really important that they know that they're free and clear.
Yes,
Right.
That is what we do, and we do all of this through the escrow process. A lot of it's behind the scenes, you don't even realize it, and then when you close, you get a title policy that says exactly what's, your new loan and anything only the things that you're aware of, nothing from prior.
And that you're responsible for as the buyer.
Exactly.
Perfect. Okay, thank you for that. So today I really want to focus on Proposition 19 because I think it's extremely important for people to understand the opportunity with Prop 19 and what it means. So can you explain a little bit about Prop 19?
Absolutely. So Prop 19, this is a huge benefit and not a lot of people know about it. Prop 19 is the law change that in 2021, before it was Prop 60 and 90. And what this does, probably the biggest benefit that most people, that we see most people use, is it allows you to transfer your tax base. If you are over 55, severely disabled, natural disaster, there's a few different criteria, but the one we see the most is the over 55. So say you bought your house in, the 80s, you have a low tax base, because you've bought it for a lower amount, where with Prop 13, we only assess, the price can only go up a little for your taxes every year. And you want
God bless Prop 13.
I know, exactly. It just a little bit every year, but it's not a gigantic jump up like in other states. With Prop 19, you can take that tax base. So if you bought your house in the 80s and you have a tax base of, I don't know, 300,000, just to give an even number, you sell and you want to buy a new home, you can keep that tax base. So it doesn't jump up to $1 million.
So I need to clarify that.
Okay.
So my understanding is it was a tiered effect. So I bought my house in 1990 for $300,000. And now I'm going to sell my house for $1.3 million.
Yes.
That my tax base, when I buy my new house, the first $300,000 goes with my old tax base, and then the additional, let's say my new house costs $2 million, the $1.7 million is now on the new tax base. So there's a tiered effect.
There's a couple different ways that it gets figured out. So if you buy equal or lesser value, so say you sell for $1 million, you buy for $1 million.
Okay.
Straight transfer.
Okay.
If you then you sell for $1 million, you buy for 1.5, that 500,000 gets reassessed.
Gotcha.
That's the tier.
Gotcha. That's the tier.
Yeah. So before you could only do equal or lesser, but with Prop 19 now you can move up. So it's a huge benefit. I mean, it can save thousands of dollars every year. It's a fantastic benefit for homeowners.
And so this is one of the reasons I really wanted to talk to Caitlin and have her explain this, is because it creates huge opportunity.
Yes.
So let's say you've lived in the big house forever and your kids have grown up and they've moved out and now you're an empty nester and you're looking around thinking, this house is too big for us, and actually I wanted to live at the beach because of the lifestyle, and then I could walk places, and it put me in a community that's different than maybe where I was, and I now can sell my house and it becomes an advantageous benefit financially to take that tax base and buy the next house and create the next adventure.
Absolutely.
Right?
Yeah.
So you're not locked into your house forever. And I heard you say that you can use it 3 times.
Yes,
Okay,
you can.
talk more about that.
Okay, so a couple things to remember about Prop 19. Here's the main requirements for the over 55 criteria, transferring your tax base. Must be your primary residence. That's huge. So primary to primary, you have to be replacing your primary residence. You can now use this anywhere in the state of California. This is huge. So I mean, you can be here in Long Beach and say, no, I want to move up and be closer to my grandkids or kids in Napa. I don't know, throwing out Napa.
Yeah.
Who doesn't want to move to Napa? And you can do that now. So any of the county, anywhere in the state of California, you can do this up to 3 times. What I love is, I'm going to date myself right now. I just turned 55. So I don't know where I want to, I may move several times. Again, I don't have to hoard that now.
It could be Napa.
It could be Napa.
Right.
So, exactly. So you can use that up to 3 times now. And now you can also, like we talked about, you can move up. So you can buy a more expensive property if that's what you want to do, but just know that portion above will be reassessed.
So, okay, let's take this to the next step.
Okay.
You moved to Napa.
Yeah.
You decide it's beautiful. I love visiting Napa, but it's kind of hot in Napa. And you decide you're going to move to San Diego.
Yep.
Can you do that?
You can. You can. You decide, and I have had this question recently, and had a conversation with someone from the assessor's office on this recently. You can do it again because you can do it 3 times. If you move and you decide this isn't a good fit, it's too hot, it's too far, whatever, you can use this 3 times. So then you want to move to a condo in San Diego, you can do that and keep that same transfer, keep that same tax base. Just know if you're changing, going any up, that portion will be reassessed.
Reassessed, but only the upgraded portion.
Exactly.
Fantastic. So what I really like about this is that if I make a decision that Napa is my destination and I get there and think maybe I made the wrong decision, I'm not stuck. I don't have to take that as forever. I can make changes and reassess and create new adventures in my life.
Absolutely. And I think before what we saw was where people were holding on to that because before it was just one time. You could use this one time. It was a one lifetime benefit. Now you can do it 3 times so you can change it up and do whatever you want. Like you said, adventure awaits.
Adventure awaits. Okay, tell us what other points on Prop 19 that you would like to highlight?
One other thing on requirements, you must, if you sell and you're going to purchase that new house, it must be done within 2 years. So there is that timeline. Yeah,
Okay.
I don't want to forget to say that. And then to always check with the assessor for any other requirements. Another portion of Prop 19 is the interfamily parent to child, grandparent to grandchild transfers. There is an exemption for that. So say parents want to pass on a property to kids or grandparents, want to grandkids, you can use this benefit, but it needs to be primary residence to primary residence. That also, that is a change. It used to be investment properties were allowed. This is more of the unpopular change in the laws, but you can still do that. And there are some price requirements on that. So I would encourage everyone to check with the assessor on that. But you still can pass that on. Kids you would need to move into the property within 1 year.
Oh, within a year.
Yes, and file your homeowner's exemption. That's huge. So
what does that mean, file your
homeowner's exemption is something every property, you can file what's called a homeowner's exemption with the assessor. It takes $7,000 off of your assessed value of your property. Not $7,000 off your taxes, but off of the assessed value. It works out to be about $75 a year. But it basically shows that your property is owner occupied. You fill out this form, you sign it, you are saying you live there, it is owner occupied, it is your primary residence.
Okay.
So that is a requirement. You have to file that. You have to move into the property, file that within 1 year.
Sounds fantastic. So what you're really hoping for is that your parents live somewhere fabulous, right?
Yeah. And you want to move in there.
You want to move there, yeah.
Exactly. I mean, there are, though, other requirements to that, so I really encourage everyone to look to the assessor, to have those conversations with the assessor. One thing to make note of where I have seen that is, say, there's more than one kid, there's more than one beneficiary of like a trust, say, and you're passing this on to them. The assessor may ask for a copy of that trust. They want to see how many other beneficiaries. You may not get the full benefit of it if you're moving in, but just do your homework on that before.
So let's say that there's 3 kids, and one of the kids moves in and calls it a primary residence. That's efficient. And then what happens with the other 2 kids?
The other 2, that's where it gets a little tricky, and that's why I always say talk to the assessor first,
Okay.
talk to your estate planning attorney first. If it's in a trust, talk to your CPA, because they may, if there were other beneficiaries to that, that could get a little tricky on if you get the full 100% exemption or if there's a portion of it.
So just to clarify, if the property is in a trust and someone passes away, the next generation can take advantage of Prop 19.
Yes, if one of the kids moves in.
If one of the kids
Yes.
moves in. Yes.
Has to
Okay.
be primary.
Can you give us a specific example of one that you have recently worked with or worked with during your career that would become applicable to what you're telling us
With
now?
the kids and
Yeah.
and a parent to child. Yeah, I mean, I've seen that before where they're planning to move in. They know that this is, if the property taxes were to go up, they may not be able to have afforded the property taxes. So they've worked it out and they've planned accordingly. They've worked it out with the other, I've had some where I've heard it was one sibling, so that one was really easy, or not, one child, and that was easy. When there's siblings involved, that gets a little trickier sometimes, but they all work it out. They have different ways, like if they own multiple properties, one gets another. There's different ways to do it. I would just encourage everyone to talk to their, either if it's in a trust, there's trust attorney, CPA, assessor, get it all straightened out. But it can be done, and again, it can save thousands of dollars a year in property taxes.
So how would somebody find out who the title company is on their property, and then how do they get in touch with them to put this information into play?
Okay, so title does not get directly involved with Prop 19.
Okay.
That happens out of escrow.
With the assessor, though?
With the assessor.
Okay.
Has nothing to do with title.
Okay.
So we say someone's going to use this, and we've had transactions where they're going to use this benefit, whether they're over 55, parent to child, whichever portion. The forms are filled out and filed with the assessor after the close of escrow.
Okay.
You have to close on both properties prior to submitting your claim form. And so either way, whether you're buying first or whichever, you have to close on both properties.
Okay.
You have to turn in the claim form to the county that you are moving into, to the replacement property.
That's the essential point. Okay.
And also, so say you're moving counties. If it's all inter-county, you don't need to give them a tax bill. If you're moving from, say, LA to Orange County, you would need to include a copy of your LA County, the original property's tax bill, when submitting it to Orange County, because they'll need to see those tax values.
Okay.
But to fill out the claim form with the assessor of the county that you're moving to.
Gotcha. So, Caitlin, in addition to Prop 19, while we have you here, thank you for all that wealth of information. Can you tell us what the process is if kids are going to, or family is going to inherit a house, someone has passed away? What is the process to notify the county or anything else?
I love that you asked that, because a lot of people don't realize you are supposed to notify the county assessor when a property owner has passed away within 150 days.
I think there's a lot of people that don't know this. I work with people and they're like, I didn't even know to do that. And I'm thinking, of course, because it doesn't come with a handbook. You don't get notified, right? Okay.
Absolutely. No one knows this. I just was at an event with the assessor. They actually said as well, this is not information that is widely known.
Yeah.
So
150 days.
150 days. What's really, a couple things will happen. And this is important to remember when you are selling a property, or if you're even going to keep it, that this could happen. So once you notify, what the assessor does is when a property owner dies, it is a reassessable event.
So what does it mean to notify them?
Well, when you fill out that form, there is a form, death of a property owner. It just lets them know that the owner has passed away.
So would you go on to the LA County
Yes.
Tax Assessor's Office's website and get that form?
Yes.
Or would your trust attorney handle that for you?
It depends. I
Okay.
mean, so the attorney might handle that for you. You might be instead of that form, you might be filing an affidavit, death of trustee, affidavit, death of joint. There's different forms that you may use.
Okay.
But there is a form they are supposed to be notified.
Something official needs to happen
Yes,
there. Okay.
within the 150
Okay.
days. And what happens is that is a reassessable event. So the assessor will reassess back to the date of death. So what we see where this comes into play, I think, within real estate transactions is, say, families selling this house or this property. They close escrow, everything's smooth, everything's done, and then maybe a year later,
Yeah.
the successor trustee will get a tax bill, a supplemental tax bill that is that date of death to the time that they sold. So they're going to get a tax bill bringing it to the current market value.
Right.
And this is really common. We get a lot of questions on this. I know you probably get a lot of questions on this because this bill comes as a surprise to so many people. And we try and really spread the word to, before all the money is dispersed and distributed, hold some money for these taxes, because this tax bill will come. It can take up to a year, 18 months. It will come. They will, and it will be in the name of the successor trustee if it was in a trust. And if the property's already been sold, it will be an unsecured property tax bill instead of secured, because they no longer own the property, but there will be a tax bill.
And the thing that I see is so detrimental to families is then the equity is distributed throughout the heirs, and then if you're the successor trustee and you're now responsible for this tax, try to go back to your siblings and say, by the way, you got to cash out some money. They may have spent it. They may not have it anymore to write you a check, or maybe they're not open to even talking about it. So it's so important to keep this in mind and go through the process in the right way so that it's not a big surprise. That's not a surprise anybody wants.
No, and there's so many other things everyone's dealing with, and so, that's not what anyone's thinking about, and rightly so. But we have seen, unfortunately, those cases happen where then everyone's saying, "Well, I'm not going to pay it. Are you going to pay it?" And it's
got to get paid.
It's got to get paid. So just hold the money. Know that bill will come, so you're prepared, and it just makes it all more smooth.
Yeah.
Yeah.
There's a big process. Title is a big process behind the scenes, and so often, like with Prop 19, it creates opportunities, and it really protects you. But also, it's important to be aware of it so that you can make decisions accordingly that benefit your life.
Right. Absolutely. Absolutely.
Yeah. Well, I really appreciate your time. Thank you so much. Before we close up, is there anything else that you want to tell us that maybe I didn't think to ask?
If you have questions on property taxes with Prop 19 and what your new assessment will be, the assessors usually have a calculator that makes it really easy, whether it's the parent to child or the over 55, a calculator to figure out and estimate your new property taxes. Or we have one as well, which is Prop 19. Titletools.net. I can get you that information, but it makes it really easy. Then you know before you close what your property taxes are going to be.
Yeah,
So,
resourceful. Very good.
Just let us know.
Okay.
Thank
you, Caitlin.
Thanks.
Make it a great day. Appreciate you tuning in. Thank you.